The following segment is sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. Is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Well, it's great to be with you.
Now, you know I follow your work closely, and I know you're involved in the futures market with regard to silver. You did a recent interview saying that there aren't any limits on shorting. You said you can really sell as much as you want. But according to Gene Ahrensberg, who I've interviewed of the Got Gold Report, well, he's saying that's not really true, David. What's the deal?
Yeah, well, thanks for, again, holding my feet to the fire, Ellis. You've done that in a couple of instances. One not that long ago is when I said the Chinese word for silver, and we kind of got that straightened out on your show. And here again, we have something to discuss on, am I right or am I wrong? Basically, what Gene says is correct. If you go to his article that I put out on our Twitter feed, so much for position limits on COMEX gold. And what Gene points out in his article is that there are limits that are applicable. And in gold, there are 3,000 contracts in the front month and 6,000 contracts in all months. And the article goes on to say that this recent smashing that took place in both the gold and silver markets was 40,000 contracts. So what that would mean is that there were 14 traders if they were all at the exact limit, and that would be collusion. You'd have to get 14 or more all saying, okay, we're selling limit amount that we're allowed to hold, which is, of course, would show collusion. And this is his article. I agree with that. Or that basically it might have been 1, 2, 3, 4 traders, probably more likely 3 or 4. It might have just been 1. We don't know yet. And the CME group and the CFTC is just turning a blind eye. So when I made my statement that you can sell as much as you want of what doesn't exist in the gold and silver markets, but try taking delivery where there's also a limit, that it only applies to a one-way trade. If you try to take physical delivery, they'll uphold that part of the limit. Oh, no, you can't have more than the limit. But when it comes to the sell limit, they ignore it. So I was saying it from a purely realistic perspective, meaning that, these laws that are on the books are ignored and have been ignored for a very, very long time. And this took place more than once. It took place in the silver market during this gold smash. And before that, one that comes to mind is one that took place around May 1st of 2011 after there were 5 margin increases in the silver market. And there was a massive amount of selling on paper that drove the price down significantly. So again, I'm looking at it from what the real situation is. In other words, what the real world event is. Is it outside of the purview of what the legal limit is on paper? Yeah, it is. But from the realistic perspective of what takes place when these smashings take place, it's ignored. And this, of course, should infuriate people. And there's been a couple articles on this. Ted Butler talked about where is the CFTC when you need them, and Gene's article, and there's been a few more that basically are, trying to bring attention to the regulating bodies that are supposed to be doing something, and they're doing absolutely nothing.
Why do you think that is? Why are they looking the other way right now, or not looking at all?
I think the reason being, and this is opinion, is that the financial markets have become so corrupt that the government itself and the regulators underlying these government entities are basically being pushed around by money, by the power brokers, Wall Street, if you will. I think the CFTC's hands are basically tied. I think there's some collusion between the bankers and these regulators. That's a possibility. I don't know that for a fact. But regardless, the obvious needs to be stated that the regulations are not being upheld. And you can guess your own reason why. I think it's money. I think it's one, the CFTC doesn't have nearly the amount of money to fight these bankers doing whatever they want. And basically Wall Street has Washington, D.C. in their back pocket as a metaphor. And I think that's true. There are other opinions out there. Mine is very strong, and that's the way I see it, Ellis.
So there's easy money in shorting right now. How long can that go on?
Great question. It could go on until it stops, which is a very non-answer answer, but I do have meaning behind that. It can only go on as long as they're able to keep this paper market put together. And it's falling apart, and we know that for a fact because you have the ideas that we've seen also throughout the gold and silver communities where Germany has asked for its gold back, and the Fed said, oh, it'll take 7 years. I mean, when Venezuela wanted their gold back, they did get it back, and, you know, these armored trucks went through the streets of Venezuela and brought their gold home, basically, and they had a big celebration over that. And, of course, that was kind of dismissed as, you know, this tin horn dictator and Chavez and what a horrible man he is and on and on. I won't comment on that. I'm pro-liberty, I'm pro-freedom. But regardless, that was sort of dismissed. But Germany is sort of in a different class politically, at least how what's left of the free world thinks, and yet they're given a short shrift. Like, no, you don't get your gold back right now. It's also happened in a Dutch bank that had purportedly physical gold for clients, and they made a statement recently saying they'd have to settle in cash. And that is legal on the futures exchange, by the way. That is in the contract that you sign when you sign up to trade futures, that if they deem necessary, they can make you settle in cash, not in physical. The point being that the paper game continues to wag the market. In other words, the tail wagging the dog. But that can only go on until enough people stand up for physical delivery that it becomes apparent to enough people that something's drastically wrong. And that is taking place as we speak. Many of the ETF holders have bailed out on the ETF, taken their paper, and moved into the physical market on the gold side. And that puts more and more pressure, and you'll see more and more information coming out where people can't get the gold that they thought they had paid storage on for a long time, or there's some kind of roadblock or some kind of delay. And this will happen more and more as we march forward in time, and that's what it's going to take. So there's going to be a break between the physical reality and the fiat fiction in the metals markets, and really is taking place, but it'll become more and more apparent, again, as time marches on.
I can see where all of this would continue to add to a suppression of prices per se. However, with all the other factors running against suppression and all of the demand right now, which is not decreased or abated for silver and gold, when can we see a turnaround in metals prices?
Well, I'll give you my best guess. I could use the word analysis, but I'll say guess. I think we've probably got until the end of the summer. I wrote that in the last Morgan report. Usually the summer is very dull for the metals. Not always. The seasonalities haven't worked as real well the last few years in the metals markets. Nonetheless, I think you'll see this really aggressive buying in the physical market, especially on the retail side, subside. There's really two markets. I mean, there's several to the gold and silver markets, but they really break down to the physical reality or the fiat fiction. And the problem with the physical market in gold right now, from what I have been able to determine, is that some of these ETFs are being drained of gold, but there's also gold going into some of the depositories. And I know that for a fact because I know some of these people on a first-name basis, and I trust them. And they have told me that, you know, commercial bars are coming in to the facilities. So the big bars, the commercial bars, are coming in, and the gold coins of denominations and gold jewelry in the Asian markets are being sopped up at a very high rate by the investing public. So to look at the market in total, it looks as if we're still seeing enough supply coming in through the refiners and through liquidation of some of the larger holders of physical gold to keep the market quiet for a while. And my guess is probably September or so you're going to start seeing these markets come up. I think you're going to see, you know, gold above this smashing price of the 1550 level. Well beyond that, probably up to 16, 17, 18. It's hard to predict. By the end of the year, silver will breach the 26 level up to 27, probably up to 30 by the end of the year. And that's all in a perfect world where the bankers still have control, not accounting for any kind of a one-off event or a black swan, if you will, that is out there. And it could be very quickly that something manifests in the financial markets, that somebody that really has some power isn't getting a gold delivery or something like that, that all of a sudden these markets start moving up very rapidly. But discounting that, I think it's going to take some time. I think this is a transition year. That's what I said in the beginning of 2013. I'm maintaining that idea that this is the year, 2013, where not only the people that are already in the gold and silver markets acknowledge it, but a lot of people that are on the periphery that look at it on a casual basis or a what-if basis, that are kind of just watching it for entertainment purposes, find out for an absolute fact that there is a physical market that exists, and there's also this phony baloney derivatives market that is way, way, way overextended, and it's going to start falling apart. So I think that's going to manifest this year. I really believe that. Doesn't mean we're going to get sky-high prices this year, but it does mean that there'll be a turning point or a tipping point, if you will, that the acknowledgement that, geez, I have to have gold and silver. And I believe strongly there'll be a day where in this bull market, and I don't know when, where it'll be extremely difficult to get the physical metal at some point. And I'm not talking about a roll of eagles or a silver bar of 100 ounces or something like that. I'm talking about some big entity such as the Central Fund of Canada or a Sprott Physical Silver Trust or the Zurich Continental Bank. And one of these bigger entities that buys physical and has a no-nonsense policy where they don't use derivatives has a difficult time and gets delayed or that. When we see that, we pretty much know that this derivatives covering of sales is starting to break down.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
Perhaps I should be asking Rick Rule or Eric Sprott about this, but do you think they have any more major purchases of silver coming up, like they did several months ago at $26 an ounce?
I actually have a pretty strong relationship with Sprott, as you well know, and I asked that question, and the problem is that, they're in business to make money like anybody that has a business, and they need a premium on their PSLV to make it worthwhile, and the premium has basically been exhausted out of that. So they really wouldn't make an offering unless they could at least break even on it. They're not going to offer physical silver at a price where they're going to actually end up losing money, which is unfortunate because it'd be a great time, in my view, to at least add to the position that they already have. But again, they're in business. They have certain regulations and certain requirements that they have to meet in order to make an offering, and it just would not work at this particular time. So it's a great question. It's one that I had, and I just had answered, recently, and that's the reason.
In addition to selling into the futures market, are you accumulating more silver and gold bullion right now? It would seem like if you're going to do it this summer, now would be a good time.
Yes. I've been an advocate of this silver123.net, which is a monthly purchase program. I participate in that. But on top of that, yes, I've been buying in the regular markets, physical, all along, and I continue to do so. And I am willing to pay a higher premium currently because I feel it's worth it. I do think that the margins or the premiums will come down during the summer, which makes it even better buying opportunity. And I honestly don't think the ultimate lows have been seen for silver and gold at this point in time. But I'm also aware of the fact that no one can call an exact bottom every time. And I'm willing to do what I've taught all along, which is a dollar cost average. And when it's low, you want to buy. But it doesn't mean you have to make your total purchase. It's a lot smarter to just filter into the market over time, say, 3-month, 5-month, 8-month, 1-year type of a purchase program than it is to just try and pick an exact bottom and then find out you're wrong and be disappointed.
Let's talk about themorganreport.com. What are you offering to current and new subscribers?
Well, I'm going to be talking about some of these newer reports that just came out. I haven't finished reading it, but I will before I write the report. The Silver Institute Silver Survey 2013 just came out, so I'll be reading that and commenting on it. Also, there was a bank report on the silver market not looking that robust, and they make some good points, particularly about the solar industry, which I will also be commenting on. And, I try to be objective. The one thing that these analyses miss, and where I stand on the other side of the fence from them, is they always have the presupposition that the currency markets are fine and nothing will ever happen to them. In other words, they presuppose that the dollar market, the U.S. dollar, is always going to be there. It's always going to be settled that way. Everyone's always going to want the dollar. And because of that, well, here's, the situation. We've got this much supply, this much demand, investments starting to fall off, silverware's not going to be as robust, jewelry won't be as strong, and all this stuff. Well, that would make sense in a market where the dollar really had strength and where the financial markets weren't in the crisis mode that they're in. But I am on the other side. I think that we are still experiencing a currency crisis in kind of an ongoing way since the 2008 financial crisis, which everyone refers to it in those terms, and it's yet to be resolved, and the problems that occurred at that time have only continued to increase. And because of that fact, I believe that all this analysis about what may happen in the industrial side or the investment side of the silver market, or the gold market for that matter, is not looking at the big picture, which is we are in a world situation that's never been experienced before, where we've been running the whole system on a lie, and that is you can print wealth. Cannot be done. Or adding more debt will solve a debt crisis. Cannot be done. And because of those two absolute facts, I have a different approach. I say that all this stuff matters to a certain level until the dollar breaks down further. And at that point, people will look for whatever they can to either preserve their wealth, get out of a situation that they're in, which is a currency that they don't trust, and move into something they can trust. And that's always been gold and silver, particularly in today's world. So that's the way I view the market. And those, of course, are factors that are never really commented on in these mainstream studies. And if I worked for a mainstream bank or the Silver Institute or one of these other places, I probably would have to have the same view because it's the establishment view, it's the mainstream view, and it's held for quite some time. But if you look at what's really happening, and it's really right there in front of us, what you'll see is that nothing has been solved since the 2008 crisis. I think that shook up everybody. And again, those problems have only gotten worse, not better.
Has nothing been solved since 2002, for that matter?
I don't think anything in a significant way has been solved. I do think that, the economy may be, quote-unquote, recovering in some areas, and maybe there's a pickup in the velocity of money, and maybe the feeling about the economy is better, and all that could be true. But the fundamental facts of getting out of this debt burden has not been solved, and I don't think it can be solved. I think we've already passed the point of no return.
With all the uncertainty happening with the federal government, we don't need to expound on that. Everyone is hearing about it from every other direction. With all that uncertainty and all of the trouble and everything we've just discussed, we still have a relatively strong dollar. Does that mean we're better off than Western Europe right now?
Yeah, right now. I mean, it ebbs and flows. I mean, we've done enough of these shows together and watched the financial markets very closely, and you had times when, I forget who it was, but one of these very well-known stars, I don't follow this stuff much, I think she's a model, said, I don't want the dollar anymore, I want to pay in euros. So there's been times where, no, dollars are no good, I want euros, and now euros are no good, I want dollars. And this is kind of what I call the banker's last vestige of hope, pretending that one currency is better than another. I'm not saying you can't trade currencies and they don't move against each other, but the ultimate reality is that they're all fiat fictions, and in the end, they're all going down. I mean, if you look up what currencies are doing versus gold from a long-term perspective, they're all falling against gold, and that's as it should be, because you've got the currency market and you've got the money market. The money is gold and silver, and the currency is just fiat fiction. It's paper money. It's what we call currencies. It's what people believe in, but they believe in it until they stop believing in them. And it's not going to be 99% of the population. It's not going to be 90. It's not going to be 25. It's going to be just a couple percent of the population that catches on in time, and the rest of the people are going to wonder what the heck happened. And what happened is something that's been repeating again and again and again throughout monetary history, and that is you cannot solve a debt problem with more debt, and paper finally finds its intrinsic value, and that's practically nothing.
Now we can find you all over. In addition to this radio show, you have your website, themorganreport.com or silver-investor.com, and quite a few followers on Twitter.
That's right, and I also have a YouTube channel, which is Silver Guru. We archive all the interviews that we do on that channel. It's myself. David Smith, or a junior analyst, gets interviewed from time to time, and videos that we do and that type of thing. So it's a good place. If you want to catch everything, that's fine. I don't know anyone that's got that much time, but maybe some people do. But if you want to kind of pick and choose something you want to hear or see, go to the YouTube channel. That's probably one of the best places. The other place to go is to go to the website and sign up for our free weekly report, and that is also archives everything we do in any given week. And we also take questions from our readers that we answer on a weekly basis. So there's a lot of free information out there, and for those that are serious, you can subscribe to Money, Metals, and Mining, the Morgan Report, and all that information is over on the right-hand side of the website.
David, once again, a great interview. I appreciate your taking the time from your day to join me today.
My pleasure. Thank you.
I've been speaking with David Morgan of themorganreport.com. Listen to the segment again on the podcast page of our website, ellismartinreport.com, and download the entire program on iTunes. This segment has been sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.